Happy Thursday, everybody. Back again. It's the same time, 12 o'clock Eastern, 6 p.m. Central European time, very late Asian time. Not too late, actually. It's really weird. I can hear myself talking, so I'm going to reduce the volume right here so I don't hear myself. Anyway, guys, yeah, happy Thursday. Sorry I couldn't be there in person on Tuesday. I was yeah, invited to a small retreat, which was really exclusive. So I was very fortunate to participate and meet, yeah, some industry titans and participants across various sectors of the industry, not tech. So they were non-tech. They were more industrial in the energy field specifically, and then in the finance sector as well as in the industrial sector and communications. So it was interesting. But now I'm back Thursday. Lots been happening. You saw the Argentina index. We shared that with you um, last on Tuesday. We got a lot of news on that, so really excited about the news. And yeah, and of course we continue to deliver, we continue to execute and build on that, right? And so the Argentina index again is pulled out from the TSN, so we're using the TSN for that. And as we go down that path, we've already gotten a lot of input. And as you know, we've been working with the government on a number of different sources. And in terms of being able to aggregate the data and then being able to give that out again. And whilst we've been doing that, we've also had some really good response from the community. And we've also had some really good partnership with the government, as you know, right? And so, what has that led to, right? And so, we've actually done and created, we think, partially a movement to also around the same sort of type of announcement to be able to share with you. Here, let me just share this in the right screen here. I'm on the wrong page. Duck, duck. And so here there is an interesting article from, I don't know how, I mean, we can actually translate this post. So super easy for those of you that don't speak Spanish. But the government of Argentina is putting out there a database with 12 million data points a day with product information, location, etc. So you can do the analysis, develop apps. So we're going to be integrating these 12 million data feeds into Truflation, ensuring composability into the categories and allowing any developer to build on top of these data sets. So we're excited to see that. And as a result, out of Argentina, a lot of movement and reactions and turnaround has happened. And so we're super excited to see more data get unlocked in Argentina and have that happen. So pretty exciting times in Argentina and what we're doing over there. Stay tuned, be aware, and watch out for that. You know, we also released the inflation index, right? So we had one of the components that we released when we shared with you the Argentina index is um, a new Big Mac index around Argentina. And if you listen to the show on Tuesday, you will have heard that we opened that up. And you can see in Argentina over a period of time that we've seen the Big Mac go from 7. Here, let me share this tab. I don't know why it's not sharing. It should be sharing. No, it's yeah. Let me share screen. I'm going to go here, share this. Boom. Now you're seeing, and I'm somehow sharing double, so I don't know where else I'd be sharing this, but at least you're seeing this now. And what we saw here, remember when I highlighted this, it was 7 pesos back in 2010, 15th of February 2010, and now it's up at 6,100 pesos a Big Mac, right? So prices significantly gone up, and specifically starting around the 2019 timeframe, boom, and it shot up. So pretty interesting times. But what has that led to, right? That has led to something that I'll come to a bit later, but we want to go into the news and alpha that's been happening right now. But you can see, the big thing I think this week was obviously we have the DNC taking place, the Democratic National Convention, and we have all the participants in Jackson Hole, all the central bankers getting together. But at the same time, the central bankers, they came in and shared with us their minutes, right? So we saw the minutes of the last meeting that we had just coming up, and ultimately we, I don't allow, I don't need notifications from you, but you can see City AM. Yeah, there you go. Nice. But you can see federal minutes signal that September rate cut, right? Was expecting a rate cut. And you saw in my show on Tuesday that in the AMA that we were talking, which was a recorded show, we went to FedWatch. Remember, we were talking about where is the ratio of, are they expecting a 25 basis points drop, or is it a 50 basis points drop? And so you can see still about the same metrics. So if you go back to the show, you'll be able to see that in the FedWatch, you're seeing a 75% are expecting a 25% drop, and 25% are now expecting a 50% drop, 50 basis points drop. So significant, no change really, despite the minutes being released. But I think the market is really expecting a drop. The question is how much and where is it going to go? And remember, it's an election year, and ultimately we want to go into a new voting cycle with a positive economy. And so what can we do about that? Number one is issuing 50 billion a day to make that happen, which is what we've heard of from the government, the Fed Treasury. We talked about that in the past, but right now interest rates is the hot topic du jour, and we've got new inflation numbers coming out again in September, which will be related to the numbers of August. And again, remember, they're using stale data. We're trying to do it real time, build it bottom up, and aggregate high frequency data across 18 million items, 3 price feeds per item that we track on a daily basis, right? So it's more or less real time. It's not looking back at historical data and having a look at that, right? And I think we saw that, right? We saw that. And if you are paying attention to our show and Truflation, you will know that non-farm payroll has been, in terms of people employed, was revised downwards by 800,000. It's a lucky number, 818. If you're Asian, 8 is ba. Ba rhymes with fa. Fa is a sign of luck and prosperity. So 818, so 818,000. And 18 is even yat yao, I want luck, want fortune, right? So 18 is an even better number than just the 8. And so 8, luck, want luck, makes it sound even good. So very auspicious number. Maybe for Truflation, it's super auspicious, let's see. But either way, they revised the numbers. Why? Because they're working on old data, and it was so predictable that they were going to revise those numbers, right? And why do they have those numbers in there? How do they calculate the forecast and the reporting? And why do they need to revise it, right? They have in there a forecast for a number of new companies, small, medium businesses, average number of new hires for new, small, medium businesses equals growth in the non-farm payroll category. And so if you look at that, that's exactly what we're seeing here. And that's exactly why we have that drop in there, right? And and so, where do we get anyway, that's really, and where do we get where do we get the farm payroll from? So farm payroll comes from the US Department of Agriculture, right? So we get all of that data from the Department of Agriculture. They aggregate farm payroll, and then they pull in non-farm payroll from the sort of BLS that actually does that. At Truflation, we complement that data with a whole bunch of other data, which we will share with you how we do that. But we complement that data with, beyond sort of government data, is ADP, which is a big payroll, and they issue a lot of numbers, and then obviously the BLS. So that's sort of how we at Truflation aggregate our numbers. But we also look at job cuts, and we don't take job cuts. We work with Gray, and then we work with jobcuts.com, right? So two different sites that we actually pull that information in, and then we can balance those out. So we have more real-time data versus then just taking number of new companies that get registered, and we predict, oh, they're going to have a X number of new companies, and that means X number of new employees coming on, and so they come on and they just layer those on. These models need to change, and that's why we've built Truflation, to bring out new systems and new models that allow us to be more accurate, more real time, and share that with you at truflation.com. So stay tuned. We've got more coming out on that, and we'll be sharing that with you. And I'm going to share, and I'm doing a bit of a sales pitch all the time as I do. So we've really put together how soft is the US labor market. So again, looking at it more from a real time, we heard about the SAM rule come out. We've looked at the numbers. We've looked at the revisions downwards. We're looking at the forecasts. What is personal consumptions? We're looking at the labor participation in the market versus the unemployment rate. So we've pulled all of this data together, and we've got this. We're trying to bring this down to a much shorter narrative. At the moment, it's way too long, and we know you want to see concise, simple, comprehensive understanding. And so that's what we're building, right? We're really trying to simplify these messages and build them out on a consistent, long-term basis so we can repeat that, right? And so coming back to that number, right, there was another metric that I thought was really important to see for you, which was anyway, I need to get these ready before the show, but we're running at 100 miles an hour at Truflation, really trying to bring more data to you. And I'll share with you what we're announcing today, what we've got next Tuesday, and what we've got next Thursday, right? We're really releasing at a 2 times a week cadence, a whole new product. And we're trying to manage all of this team decentralized as much as we can to deliver at that kind of a cadence. So it's not easy, whilst fixing technical debt, making sure the code is documented, making sure any developer can come on board, and coming up with new ideas on what we could be building. So a lot of that is coming, and we will be sharing a lot more of that with you shortly. Well, twice a week. That's what I said, right? So that's coming. So hang in there. And one of the things that actually, I'll just go to here. I can have a look. One of the things as to why that came down, right, was, dude, man, oh man. Anyway, sorry to keep you busy on this, but one of the things that we were here, my replies, you can see them in here, Doc. Yeah, so you can see here, share this tab. I'm going to share this tab. I actually stop sharing because you're not even seeing that. It's not working. But here you can see the number. Why has that number come down by that much, right? 818,000. Why has that come down? You can see the number of new business registrations has come down. You can see here right at the end down here that number has come down, right? So woof, we see a big drop in new companies. Not only are we seeing a big drop in new companies, we're also seeing a large number of shutdowns taking place. This is from the Financial Times. The US tech sector has no comparison in Europe, right? So you can see that, right? So all of the tech startups are growing. Lots of new startups are happening and a lot of activity around that, right? Which is amazing to see, right? And we want to see that. But there is a bit of a problem, right? So in that same article, whilst we see the US dominate from an innovation standpoint and really encourage disruption, bring out and improve and provide betterment, we wish we could see that same innovation take place with a lot of the governmental statistics. And we're seeing that with the numbers in Argentina I shared with you earlier, where the government is opening up 12 million new data points for entrepreneurs and businesses alike to take advantage of that, right? How can we let entrepreneurs build innovative new reporting systems that are trusted, that are independent, that are immutable, everybody can access, censorship resistant, and then ultimately build a story around that, right? And so how do we foster that? And how does the US government equally do that? And so on the one hand, you see all of this innovation taking place, but on the other hand, the sad thing is, in addition to the decline in business registrations that I shared with you just earlier, you're now seeing a rise in shutdowns. So a lot of startups are shutting down, right? Since 2021, we've seen a growing rate of startups shut down. On the one hand, why? Because the cost of capital has made it more difficult for startups to raise funding and to continue to pursue their business model. But you could argue maybe that's a normal filtration process, right? This is just the course and standard procedure. Startups don't all survive, right? But the trend is more and more startups are shutting down. So whilst we're seeing less new companies being established, at the same time, we're seeing more and more companies get shut down. So as a result, the double whammy of that is 818,000 less employees based on the BLS forecast and predictions and reporting actually needing to be revised downwards, because all of a sudden these stats are starting to come in. And how can we build this into future predictions around the metrics? And that's what we're trying to do at Truflation.com. And you can see that, right? So you're seeing here, people are beginning to spend less, right? So flights, hotels, parks are all having travel warning signs, right? So the metrics are coming down. And I talked about this on Tuesday, right? You can see accommodations, right? People are spending less. They're going less to the website. Website traffic dropped significantly. So people are beginning to spend less. They're more conservative. They're worried about recession. So they're starting to save. They're starting to be laid off. They're starting to realize that the jobs are less and fewer out there. And we've been talking to some of our data suppliers around in the resourcing and employment and category, obviously, over the last couple of weeks. And in advance with that article that we'll be sharing. And what we're hearing, same number of jobs, but the amount of applicants coming for those same number of jobs has grown tenfold. So you're seeing the number of applicants coming in for a job in tenfold. That's in the gig economy, so it's not exactly the same as in employment section, but still, it's an indication of startups coming down, less businesses getting set up, big companies not hiring. And bear in mind, the big companies, everybody thinks they're the biggest employers. Yes, as a one-off, they have the most employees, but they're not where the wealth of employment comes from. It comes from small, medium businesses. So how do we foster them? How do we help them? How do we encourage them? And if they're not registering anymore, they're not launching new businesses, we can't afford it. And we're seeing growing shutdowns. We're seeing revisions in employment numbers come down. How can we get this more real time, more on time, and so we can get a better feel of what that employment look like, what the employment numbers really look like, and have that from multiple sources come in real time versus just the prediction as it is done today. So those are things that are taking place out there. You've read about them. You've heard about it here again. And I just wanted to highlight, what does that mean for us? Where do we go? I don't know, but I wouldn't be investing heavily in accommodation, in hotels, in airlines, in cruises, I think, you know, I would maybe conserve funding on there, even though we're seeing consumer spending actually very strong. You know, the consumer still is spending money, and so that is a good sign. But they are cautious, they are weary, they are going to be paying attention as to how they're spending their money a bit better. And you can see that with, as we mentioned, there was the potential for a rate cut. Anyway, and as we look at that rate cut, where and how is that rate cut coming from? What is the impact of that going to be? Ultimately, it will turn around a lot of those metrics. So that could be super interesting as well. But coming back to now into less alpha and more into one of the elements that was out there that I thought was interesting was Tom Lee interest rates cut. It's a very simple graph that you know. Wow, must have been a while back. Anyway. We'll have a look at that later. Don't worry about it. I'll find it. But all it was doing was trying to highlight which industry sectors are going to benefit from an interest rate cut. Right? Tech industry always benefits from it, but tech industry has been on a growth and it's going to continue to grow. You saw, based on the Eric Schmidt videos, I implored you to go and watch those and look what things that he's recommending and what's happening in the AI. So a new movement, new big capital being allocated in this category. And it's really a keep up with the Joneses, right? So you cannot not keep up in that sector. And it's not only happening in the US, it's also happening in Asia, and it's also happening all across the supply chain. So monitor the supply chain, from data centers to contractors building those data centers to investment houses that are building and financing those data centers. So you're seeing all of those sectors actually really growing significantly. The cooling companies needed and the energy required, right? So energy supply, where's that all going to come in and support the growth of this, you know, new phenomenon called AI, on top of the growth that's already happened in crypto and will continue to grow and across cryptocurrencies and the blockchain, in genome, right? In customizing medicines, being able to genetically modify medications to people and supply them with customized, personalized Medicare, right? And things like that. So all of these, and I've talked about this so many times, so I'm not going to bang on about it too much. And I'm already 37 minutes in, although that does include the wait time that you've had in advance. But all of these things are beginning to compound, and think about in those categories when interest rates get cut, that's going to unlock in terms of liquidity. And if you saw on Tuesday, I talked about the growth in liquidity, right? The world is growing in terms of liquidity, and Tether again just minted another $1 billion in Tether. So on-chain liquidity is growing, off-chain liquidity is growing, right? So you're seeing a number of aspects growing across the markets. As that happens, with interest rate declining, we're going to see anywhere between 400 billion to 700 billion worth of US dollars unlocked into the market. Where does that go? Is that going to go into stock market, equities, cryptocurrencies, other asset classes? Will they be buying back bonds? I don't know. Don't think so. But they will be going and putting that into other yield-bearing assets. And I talked to you why. And so if they do unlock those, where are those going to go? Likely into industrials, into energy, into financials, right? Because all of these need to be financed in some and represent new financial opportunities. We just need to be anyway. That I'll go into that a bit more later. But that's sort of what's happening. That's sort of where we talk about the alpha section. That's the end of the alpha section, and I will let you make up your own decisions on how and where you want to invest. Subsequently, you know, we've been busy now about Truflation, right? I've been talking about the Argentina index and what that's opened up in terms of data. also, what we've launched is the Big Mac Index. You've seen that. We open that up. I'm going to share the screen. You can see Big Mac Index. But now we've opened it up across 15 different new countries. So now we have a total of 17 countries that track the Big Mac. So you can sort of, based on the price movement of the Big Mac, work out what is inflation in your country. Single item. So it's not really representative, but at least it gives you a gut feel breakdown on what that could look like. So here you can see we got index, we got Argentina, Spain, we've got France, we got Italy, we got Germany, Mexico, South Africa. How's South Africa doing? Let's have a look at that. So in South Africa, you can see over a max period of time, since back in 2010, the Big Mac was 17.95, so 18 Rand. Rand is the South African Rand is the name of the currency there. And today, a Big Mac costs you 51.90 Rand. So there you go, from 17 to 52, maybe from 18 to 52. So that's quite a big increase over the period of 14 years or 13 and a half years. So anyway, those are things that we've launched. And one of the things is this got covered and picked up by a Crypto Slate. And so they did an interesting interpretation, right? One Bitcoin now buys over 10,000 Big Mac, sorry, up from just 51 in 2015, right? So of course the Bitcoin price has gone up, but so has the Big Mac, as we've seen in all the different indexes, right? So if you look here, you can see this article, right? Really interesting how they do it. They look at the price of the sort of Bitcoin here, and then they compare that to the price of gold, right? And so you can see all these different, and so they've been looking at the Big Mac Index, which is British pound, so how is it looked in the UK? What's the British pound, how that's changed over time. But then they use the cost of the Big Mac, right? So they pull in this data from Truflation, really cool, right? So they use all of these elements to then help they pull in the price of Bitcoin, they then do that. And then the price of the Big Mac, they look at the different currencies, how currencies fluctuated in the different markets, and then how has gold moved on, right? So they've actually pulled all of that together, which is really cool and great to see, which is what we want to do. We want you to tap in to the Truflation Stream Network, extract as much data as you possibly can, and then build your own index. We will help promote those indexes, visualize them in the dashboard, as well as provide them to all the 21 different blockchains that we're connected to. We will help and work with you to get those visible on different exchanges, perp dexes, create liquidity pools around that, create synthetics around that, so that then these can become tradable, monetizable, and provide a return for you. Instead of meme coins, let's create meme indexes. Let's have some fun. Let's make sure we do more Big Mac indexes. Get those out there. Create red wine indexes. We've got a Burgundy index coming. Burgundy's gone up 200% in the last 4 years. Investable grade Burgundy, right? So bear in mind, right? This isn't industrial grade. This is investable grade Burgundy wines. You see Rolex indexes. We've got a company that we're working with on Rolex indexes. They're building it out. They've got the price feeds. And so we're putting that into the TSN. And then you can combine all these different things. And just imagine the meme, a vegan index, a vegetarian index. Are you a vegetarian? Create a vegetarian index. Use all the price feeds that are vegetarian related. Agricultural products. We have all those prices on Truflation.com. So we can create any kind of index and have those distributed so anybody can see, right? But more importantly, you're seeing that. And one thing that we did actually do already on Truflation, so I don't know if you remember, but in the EV index, electric vehicle index that we created, we looked at commodity prices. And what we did in the commodity prices is we put a toggle in there. So we looked at what is the constitution of a basket, a weighted average of all the commodities needed to create an electric vehicle, right? Based on the type of electric vehicle. So here you see all the commodities, and here's a basket of what the value is of those commodities, right? Today, the value is about $8,300, right? So if I look at that $8,300, how, what is the multiple I can get with a Bitcoin? So if the Bitcoin purchasing price toggle, so that's what it looks like in fiat terms, right? Now in Bitcoin terms, how many baskets can I buy? I can now buy 7 baskets. So I can buy the material with 1 Bitcoin, the material needed for those electric vehicles to feed the production of 7 vehicles. So what do you think? Should we add this toggle to the Big Mac index? So you can see 10,000 Big Macs I can buy, and we can then pursue and do the same as with this article and talk about 1 Bitcoin. What do you think? Let us know. And we want you to let us know in the discourse channel. So I've shared this before. We have a discourse. We have a forum where you can tell us what we should be building and working on, how we can support the protocol. You are token holders. It's your TSN is the token holders platform, right? So we're building this out, and we want to see how we can engage, or how we can engage other participants that are already working on the TSN, from Usher Labs to Quill to Holdex, all of these partners that are helping build it, but also all the node operators that we'll be announcing next week. So stay tuned next week as we go live on mainnet with our node operators, and you'll see who they are. They have a lot of development resources and experience in managing decentralized data networks. And so as a part of that, they've also committed a number of resources to support the help and development of this. So this community that is building around TSN is beginning to grow. And it's not only True Labs that is doing all the lifting and all the work, but all of a sudden it's multiple different parties that have different ideas, different concepts on where and what they can start building. And we will leverage that and share that with you, and want you to put in here who you think and how we can allocate the resources to build out new features, right? And if we should add this toggle, we'll add it anyway, because I think we've already built it. It's a super easy, quick deployment to add that. And as you know, we've got all of our development on GitHub, and all the backlog is logged in there. So you can then come in, and we will publish this very soon, but you can then see all the things that are non-status at the moment. And we're going into a sprint next week. You can see the backlog, you can see the to-do, and then you can see all, I don't know why I can't move on. I have to increase the screen so I can then see it. But you can then see we've got all the in-spec, in-design, in-build, and you can see across here, look at all these different things. We've got in-design, design is ready, waiting in coding, it's all done. So we just moved all the done things away because we had show and tell today, so the team was sharing. And so when it's done, we move it into archive, so it just saves away what has been done, and you can then see that. And you can see it's by category, it's by different people, it's by tracked, it's viewed. You can see all the developers that are building on there. 46 of the developers haven't yet been assigned tasks, so we start assigning them and bringing them on. And these are from the node operators, right? Once they come on board line in real time and on mainnet, we will start assigning tasks to those. And again, it's growing. The community is contributing and growing. Bear in mind, we're 3 years old, right? Coinbase took more than 10 years to get where they are today. They started around 2014. They launched, and they are a 2024 publicly listed company generating lots of different activities. Kraken, all the other big, Binance as well. A lot faster. They were a lot earlier on. They built it out in trading. We will come and build out what we're doing with Truflation, with macroeconomic data. We're tackling a very different sphere and really trying to bring that. And thanks to them, we're actually here building out Truflation. If it weren't for the commitment that Coinbase has given to Truflation, and Chainlink that's given to Truflation, Fundamental Labs, and other community members, the Build program at Chainlink, the Link Marines that have been helping promote us, and Balaji, Brian Armstrong, Sergey, Johan, all of these individuals have been really supportive in helping Truflation and get launched and be here today. Not only them, we've also had a number of economists, that have helped us, right? We've had the likes of Pomp, Raoul Pal, Scaramucci, Anthony Scaramucci. We've had Daniel DiMartino Booth. We've had Michael Green, all of that whom, and now with Argentina, we've got Manuel, we've got Sergio, we've got Rodrigo, Javier, it's like Ariel, number of different supporters to help Truflation really grow, and the TSN network to grow and really scale up as we age and mature in our evolution. That's a lot around Truflation. Check out the activity, what's been going on, the Big Mac Index. Let us know your comments. What do you think? We'll add the toggle in there, and we will also make sure, we just continue to innovate and share with you more of our updates. And just to give you a perspective, one thing that I really want to take appreciation for is a token holder and participant in Truflation, D-Whales. They actually wrote out a report, which I talked about earlier, but I never really gave them the appreciation for it, on the decentralized index network for RWA metrics. So this is what we're really doing. How do we build this indexing capability and empower any analyst, any scientist, any economist to be able to use verified data that is transparent, and then build out their own index and leverage this network, not only to calculate the index of real world debt, but also govern and maintain that index on an ongoing basis, and then be able to distribute that to a wide array of blockchains and a wide array of different dApps that are on those different chains. But yeah, they did a really good insight into the report where they go into the introduction, they go into what we're building. Really sort of great to see D-Whales put together a really detailed report, insights, some of our metrics that you can see. They've pulled together some of the technology, the different investors, how big the ecosystem is, etc. So you can see a lot of that there. And that's really what we're working on, what we're building towards. And you'll see more around the labor market. You'll see more insights around as we expand into new markets. As I mentioned on Tuesday, we've already got new interest in new markets. So we're just building those out, trying to develop heads down in this bear market, or sideways market, I should really call it. But really, how do we build those out and get those into the market? And I think that's it. So now I'm going to go into a bit of the community section, and you can see there were some questions that came in from the community around what we're doing and what we're working on. So there was one question from Crypto Loopto asking some Australian data, please. I won't go into the other language that you mentioned there, but FFS, if that says it or anything. But sure. We export so much raw material. You betcha. There's a lot of commodities coming out of Australia, and we've been looking at Australia, and we've identified a couple of partners to go to Australia. It's like really easy for us. The data is readily available. And it is nice to see, especially all the commodity pricing. How could we do something there? What could we do that? And then how could we contrast Australia? The other thing is the Australian government, if the US is working on a monthly basis, the Australian government works on a quarterly basis. So every quarter you get public inflation numbers. So if we'd go daily, we'd be updating the frequency by a significant magnitude. And ultimately, if you're looking for magnitude of improvement, this would help do that. I think it's just largely a resourcing issue. and a cost issue. How do we resource it, the cost and the ROI associated with that? But yeah, I like your point actually now that you bring out the raw material aspect that are needed for the production of lots of goods that we're purchasing. Would be a good angle. Let me have a look into that. And why don't I put this up onto the Discourse channel and see how the community votes, and we'll get this up there. I shared with you the Discourse already, and I'm just looking for, so how do you find that, right? Instead of giving that on Twitter, you can find that super easy if you go. So I'm in the electric vehicle index. I should be on a Big Mac index, but I can go to network. I can go to the governance portal, and inside the governance portal, we have forum. So I can come under governance. I can find forum, and I can see under here all of these elements. You just need to sign up, put it in here, post your queries in there, and we will get to them and vote on them, right? And if you raise these again and you promote it in a Twitter like you would and share this, tag Truflation, we will pick up the discourse and then we will engage in it and add our comments live in there so that we can work async to no matter what part of the world you're in, we get these notifications and we get that. So keep up the comments, keep up the recommendations, and yeah, it's okay to slap us. We're big boys, so we can take an FFS. And we will try and address that. But ultimately, it's part of the community, right? How and would you like to be involved in helping us set up in Australia? We've had people in India try to reach out to us, and they want to do all the heavy lifting and do it all. We've had people from Brazil come in and help us, wanting to do a Brazilian index. And Crypto Lupto would love to work with you and figure out how we could get a Australian inflation going and get more metrics from Australia in there. Glad to do that. Spanky came in. When deflation? Yeah, good question. Yeah, look, we're seeing inflation come down. And remember, before we're seeing disinflation, which is a decline in the inflation numbers. And deflation is when cost of goods come down. Look, we struggle to see deflation in the food sector, right? In the food and housing sector. Why would people drop prices, right? Unless its expiry date is hitting and it becomes a sale item that they want to get offload. That's very likely. It's interesting. We were talking to a couple of students at some of the economic programs at some of the universities, and what they were telling us, oh yeah, we get food for free now, so that's deflationary, isn't it? Yeah, but it's only at the end of the day at 9 p.m. at night. They go to the local, if I said the shop, you would know which country it's in, so I won't do that. But yeah, they go to the local bakery or the local fast food outlet or quick serve restaurant, QSR, and then they go and get the leftovers, and then they can take that home. You have that in any country around the world. And ultimately, you can either buy it really cheap or they just give it away because they would be throwing it away at the end of the day. And so that would then drive deflation, right? And if that continues to grow, then ultimately deflation would be bigger. We actually don't even see deflation actually kicking in. I don't think groceries, food, grocery stores are living on 1% to 5% margins, so they're not really gouging as the market is seeming to believe right now. But you could argue that the Unilevers, right, these big 7 companies or brands that I shared in the tweet last time or on the show last time, they're the ones that actually could be bringing prices down on their items, allowing then the grocery stores to actually maybe make, instead of 1% to 2% margin, maybe 5% margin. Ultimately, people go to grocery stores 10 times a month on average. And so you're seeing prices all the time there. And what that means is every time you go, you're buying food. So the volume at these grocery stores is big. They have huge volume, but the margins, again, are razor thin. And when you see them say, oh, we made $1 billion profit. Yeah, that's because they were doing on sales of some $300 or $400 billion in annual revenues, right? And so ultimately, that's how they have been achieving that. we just don't think deflation is going to come. I think people will only drop prices if they need to get rid of stock, right? So end of season, end of summer, I got to get ready for the winter. I want to shut down my store. I want to get a new clothing line in for the winter. I'm going to sale and discount my clothes. I've got a backlog and a huge, number of cars on the lot. How am I going to sell those? I'm going to drop the prices so that I can get the new models coming in for 2025 or something like that, right? So that's when we see deflation kicking in. But other than that, we just don't see that happening. Marco Rosmalen, would compare products with 2 date stamps. I suggest with both prices next to each other, price, size, weight differences of the product, then you will be able to see the truflation. Also mention the changes in taxes to make a complete picture of what is happening. Interesting. Yeah, I mean, we could, I don't know how I'd have to sort of have a look at that and maybe work with the data team in terms of what we could do with the taxes and how we could include that. I'm not sure what you mean by compare products with 2 date stamps. With both prices next to each other and price, size, weight differences of the products. I think I'm going to really need and ask you to help clarify that. So I'll put that in Twitter, and then I'll put a link to the discourse. So if you can take that and put that into the discourse, and then we will try and comment on that, and let's have a discussion there, what that would look like. And I gladly make sure that the data team also contributes their thoughts and insights into this, and have the greater community give us input in terms of what you mean and how we can make this a reality on Truflation.com, the dashboard, but also make that available on the data feeds that you would then subscribe to on TSN. Hope you find this interesting. Again, it's 45 minutes, a bit longer than usual, but I'm trying to bring this down to half an hour, and I will try and get there. Hope you enjoyed this. Happy Thursday, happy weekend, and we'll be back live on Tuesday next week. I look forward to seeing you all there, and we'll have another slew of interesting announcements, interesting market feedback, and then hopefully more comments and questions from you in the community. So have a great weekend. Thank you very much, everybody, and hope you enjoyed this. Bye for now.